Good evening, everyone. We will be starting with the Iiusa EB5 panel shortly. Please be patient with us. All right, Mackenzie, we are going to start now. Good evening to all our attendees and a very good morning to all our panelists. A warm welcome to Irex Residency and Citizenship Conclave Virtual Edition. It's great to have you all joining us from different countries along with our esteemed panelists on this platform. Looking at these challenging times, we at GMN Media have put together this platform as an opportunity to educate all our esteemed investors, lawyers, immigration consultants about attractive citizenship and residency programs on offer. This panel discussion on US EB-5 program would be for 45 minutes, followed by Q&As for 15 minutes. Without further delay, I would request Mr. Mackenzie Penton from Iiusa to take over, who will briefly introduce our esteemed panelists. Over to you, Mackenzie.
Sure. Thank you very much, and to the full team at Irex, thank you for putting on this great event. This is, as noted, the Iiusa EB-5 Experts Panel. This is part of Iiusa's EB-5 Investor Market webinar series. For just a bit of background on who Iiusa is, it's Iiusa, or rather Invest in the USA. We are the EB-5 industry membership association for EB-5 professionals both in the United States as well as around the world. Our members account for a vast majority of all of the EB-5 capital formation taking place in the industry. Our panelists here today and our supporting organizations are all members of the association. So first and foremost, I would like to thank Atlantic American Partners, Cmb Regional Centers, EB-5 Marketplace, First Pathway Partners, and LCR Capital Partners, all of whom, again, are members of our association. And it's through their support that we're able to participate in this esteemed event and hopefully provide some really great educational value here on the EB-5 Regional Center program. I'll briefly introduce our sponsors, and then I'll turn it over to Kurt Royce, who will be our moderator for today's discussion. So on today's call, we have John Endicott, who's the Senior Director of First Pathway Partners based in Milwaukee, Wisconsin. We have Matt Hogan, Vice President of Project Development for Cmb Regional Centers, Samir Jan, Director of LCR Capital Partners, Pardeep Kumar, Managing Director of Atlantic American Partners, and as I noted, Kurt Royce, who's the founder of EB-5 Marketplace, who will be acting as our moderator for today's event. Quickly, before I turn it over to Kurt, I did want to mention Iiusa's own upcoming virtual event that will be taking place this fall. That's our Iiusa EB-5 Virtual Forum, which will take place over the course of 2 weeks in November. So anyone who's looking for additional EB-5 education and marketing exposure, please feel free to reach out to me directly. So with that, without further ado, I'll turn it over to Kurt for our discussion today.
Thank you, Mackenzie. I thought I'd just take a moment to allow each of the panelists to introduce themselves. So John, could you give us about a 30 to 45 second summation of everything that you do?
Thanks, Kurt. It's John Endicott here. You might not recognize me with my glasses on this morning, but I'm a senior director with First Pathway Partners. We have been in the EB-5 business for about a dozen years now. And we, like many of the other regional centers represented here, we are one of the top regional centers in the United States. We've done a number of projects throughout the years in various locations in Southern California and the state of Wisconsin and Chicagoland area. And we, of course, like all of us, we have a 100% success rate on getting our visas, our clients' green cards, that is. We have also, just as a side note, for our India clients, just to let everyone know, we have also expanded briefly, say in the last year or so, into the E2 marketplace. So this as an alternative for our India clients. And happy to speak to any of you offline about our programs and our projects. Thanks, Kurt.
Sure. And John, E2 is obviously available to all people listening. Indians actually may face a little bit more of a challenge because I don't think they're a treaty country, but
yeah,
outside of, but you can solve that problem.
Yeah.
Matt Hogan with CMB. Matt, could you tell us a little bit about your company?
Sure. So thanks, Kurt. My company is called Cmb Regional Center. CMB is one of the largest active EB-5 regional centers in the industry and one of the oldest. We've been around for over 23 years now. We were founded by Pat Hogan. Pat is actually my uncle. He's one of kind of the, I guess a lot of people would consider him kind of one of the godfathers of the EB-5 program and a long time Iiusa board member. In fact, the longest serving Iiusa board member. And last year's winner of the Lifetime Achievement Award. So we have a long, proud history in EB-5. We've worked with over 5,700 clients, over 75 EB-5 partnerships, and we've had a lot of success. As John had mentioned, many of the other groups do. We have a 100% approval rate at all of our partnerships. We have investors who have gone full circle, meaning petitions approvals at both the I-526 and I-829 stage, and we've been able to return capital to over 1,400 EB-5 investors. So we're very proud of those accomplishments and looking forward to getting to know you a little bit better, and I'm free for any questions that you would have afterwards.
Thank you, Matt. Samir, can you tell us a little bit about LCR and what you're doing these days?
Yeah, thanks, Kurt. Hi, I'm Samir Jain. I manage India and Southeast Asia for LCR Capital Partners. I'm joined here today. I've got my colleagues, Riddhi and Rishabh, who are manning the booth here out here for us today. The reason I'm telling you this is, we are completely committed to India, and not just me. I've got an entire team, who support me on the commercial side, on the client services side, and we've been operating in this market for the last few years. And we have very successfully completed a few projects, and we have hundreds of clients which have come out of India. Very happy to be here on the panel with the other experts, and look forward to speaking to every one of you, as and when the time permits. Thank you.
Great. And Pardeep, can you introduce Atlantic American Partners?
Thanks, Kurt. I'm Pardeep Kumar, and I'm Managing Director at Atlantic American Partner. We are headquartered in Tampa, and we are a part of the 47-year-old investment banking group who closed the transaction valued around $40 billion. Atlantic American Partner we established in around 2000, but we started EB-5 in 2009. And I would proud to say that we are only a regional center into EB-5 industry who's offering a diversified fund business model. I'm pretty sure that everyone is, offering a number of the very good projects, but we have a unique kind of the structure where we pool the funds and then funds being diversified into different asset classes. So since 2009, we have completed 34 projects till now, 100% success rate at I-526 and I-29 level. I mean, we closed we have an 11th fund in a series in a process. And our initial 2 funds were get closed, and everybody got their I-29 approvals and got back their money, and as well as the profits. So we work in a very different way. We have a team of the professionals who work in a very different way. And to me, Particularly, I have been overseeing the business development and marketing activity of the South Asia region. I deal with the clients mostly from the South Asian region who either lives in the US or in that area. I've been traveling extensively to Dubai and India and Pakistan, Bangladesh, everywhere. So happy to meet with anyone, offline, online, any kind of question. I would be happy to answer every kind of thing.
Great.
Thank you.
Thanks, Pardeep. And my name is Kurt Royce. I founded a company called EB-5 Marketplace. It's essentially a directory of EB-5 investments where we have pulled out all of the deal terms of each of the investments and put them on a platform to make it easy for people to compare the different investments, understand what the terms of each of the investments are. And then we also include a due diligence review from EB-5 Diligence, a company that I was part of setting up, and they provide the strengths and risks analysis on each of the investments, as well as a rating of the likelihood of getting your money back and the likelihood of getting your immigration benefits. So with that, let's start. Mackenzie, were you going to talk about this slide, or did you want us to?
I'm happy to briefly cover it, unless you want to cover it, Kurt.
Go ahead, Mackenzie. This is your expertise. Why don't you start us off?
Well, not quite my expertise, but we do have a great data analytics team who puts together a host of various resources for the industry. One of which is our filing statistics reports that we put together quarterly. And just as a note, we have a good deal more than this available on our website for anyone who's looking for more statistics. But essentially what this slide is saying, and what we wanted to highlight here, is that EB-5 is a great market for, or excuse me, India is a great market for EB-5. There were over 1,100 filings from India in 2018, which is when we have the most up-to-date data for. So, you know, we're as an association, this I think is our 6th or 7th event focused on India this year. Again, we're proud to be participating alongside Irex in what really is one of the preeminent EB-5 markets in the world. Of course, a lot of the surrounding markets around India that I know we have participants on the call from today, Pakistan, Bangladesh, the UAE, are also very important to the growth of EB-5 moving forward as well. So again, you know, the more resources like this are available through Iiusa, and we hope it goes at least a little bit of ways in setting the nice groundwork for the discussion, and obviously the reason why we're all here today is to discuss this data in the market. Thanks, Kurt.
Great. Thanks, Mackenzie. I'm going to point out the notation, the footnote here. EB-5 capital estimates are based on $500,000 per I-526 filing with an average approval rate of 85%. I'd just like to point out that the 85% is lower than you will see from the best regional centers. That includes the fraud that we've seen in the industry. There's been a number of neglected due diligence done in the past, and that has affected the approval rate in the industry. I will tell you that I believe that the approval rate on the projects that you'd probably be looking at today would be quite high. So if you do your due diligence on any investment you make, you should have a very high chance of getting your immigration benefits.
Guys, one more thing to add to that high denial rate too, and I'll just jump in. In India, it's particularly important that you work with a good chartered accountant, that you have a good immigration attorney, because another area where we see a lot of denials is on source of funds, and then also path of funds. It's important to the US government that when you're aggregating the funding that you're going to use for your investment, you're not only showing them that it came from a lawful source, but you're showing them that it was transferred to the United States in a way in which it was compliant with both Indian law and US law. So that's another important area where we also see people, you know, as Kurt mentioned, failed to do some certain due diligence that could really help them in the long run.
That's a great point, Matt. Thank you. That's a very important aspect to getting your I-526 approval. There's one half of it, which is the project getting approved. The other half is that you get approved and your source of funds dominates that determination. So first, slide we have today is the EB-5 basics, why this program makes sense. Matt, I'd like to go back to you. Your firm has been around probably as long, if not longer, than almost everybody else in the industry. Let's start with the US benefits. What are the benefits to the program from the point of view of America?
Sure. From the point of view of America, it's a job creation program. You know, if you're the US government, you love EB-5 because it's bringing in the best and the brightest from around the world. You have people who have been able to do well for themselves in their home country, generate wealth, open business, run successful businesses. And those people are coming to the United States. They're looking at, coming into the United States, putting their kids in school in the United States, buying a home, maybe buying a car, maybe starting their own business or bringing a business and expanding it from their home country into the United States. And all of those things create jobs. And then obviously the core focus of the program is that you're making a direct capital investment into the United States that's required to be at risk and create jobs. And so that has the obvious direct job creation component to it as well. So for the US government, from the Americans' perspective, it's a job creation program that has proven to be pretty beneficial over the years.
And Matt, just to follow up, how many jobs do you think CMB alone has been responsible for since its inception?
Yeah, off the top of my head, it's hundreds of thousands.
Yeah. Okay.
And so because there's a ripple effect, not only, so we have 5,700 investors that have invested, roughly $3 billion of EB-5 investment over the course of our 20-year history. But it's not only those $3 billion worth of investment capital, it's the ripple effect that investment capital can have. It's the matching component of the other dollars that are spent on projects to be completed. And then it's the money that those investors are spending, the jobs that they're creating, unrelated to their EB-5 investment that takes place when they're in the United States.
Samir, could you walk us through some of the benefits that you see being available to potential immigrants, people who want to move to the U.S.?
Yeah, thanks, Kurt. So, first of all, this program is not for everyone. It's for those who really want to get into the U.S., get a green card in the U.S. and, base themselves there, cut out all the volatility and uncertainty with their U.S. immigration. So, like I like to say that this program cannot be sold, it has to be bought. So, typically if you go out and talk to an investor and say, do you need EB-5? Normally they'll say, no, I need mutual funds, because, they don't normally understand what it is. So it's only for those that really want to have want to be in the US on a green card, have the stability there. Now, once they what is the benefit for them? Like I mentioned, it cuts out all the volatility and the uncertainty around their US immigration. They can be in the US on a green card. They could base their families there. They could have the children go to the top schools in the US. US is still the largest marketplace in the world. So they would have access to this marketplace. It's still the most fertile ground for innovation. And that's the benefit that an investor gets by using EB-5 and getting into US and getting a green card there.
Right. Thanks, Samir. So the next question we have here is, what are the program requirements? And John, can you help me with that?
Yeah, sure. So, EB-5, if you try to undertake applying for this on your own, you'll find out it's not a simple program. And like many these immigration programs, the various visa programs that are here in the States, I mean, this is a complex program. And what our role is as EB-5 regional centers is to make it as simple as possible for our clients and for our agents. So some of the program requirements, just to keep it simple, would be that the investment amount is set. It's set at $900,000. The $900,000 needs to be invested in a project in the United States that is sponsored by a regional center, if you're going through the regional center program. It needs to be invested in a targeted employment area. The definition of targeted employment area, the unemployment rate in that census district must be 150% that of the rest of the country. So, there are certain targeted employment areas where these funds need to be invested into. The the funds that you invest must create at least 10 jobs for Americans. And so again, going through the Regional Center program, these types of things are made simple by us. These are things that we take care of. Now, from the point of view of an investor, what are the requirements? From, let's say you're in India or Pakistan, UAE or somewhere, what is expected of you? Well, number one, you have to be able to pass a criminal background check. And, without getting into all the details about that, that's an obvious thing. Second, you must be able to, as Matt mentioned, you must be able to demonstrate that the source of your funds was lawfully gained. So your $900,000 and its path of how it gets to the United States has to be well documented. You need to prove that the funds were lawfully gained, and you work with your immigration attorney to do that. So basically, it's two things from the investor side. No criminal background and clean source of funds of the $900,000 investment. Okay. And you won't have to document the rest of your wealth. It's just the $900,000.
Right. Thanks, John. The next question is, how many visas are available per year? I'm going to just get through this quickly. There are 10,000 EB-5 visas that are made available each year. That 10,000 is reduced by about a third because most petitions have a spouse and a child on average. Of course, there's many that have no spouse or child, and there's some who have multiple children. But the average is about 3 people per application. And based on the current interpretation of the rules, which may get changed at some point, but at this point, there's thus about 3,000 to 3,500 investments that are available each year. Now, you can make more investments than that, and then you start eating into future years, but we won't get into that at the moment. And then, Pardeep, I'd like to ask you to address the difference between a direct investment and a regional center investment.
Oh, thanks, Kurt. It's actually the difference similar to the active versus the passive investment. And I think this is the most typical question we have been, especially from the Indian client, we have been inquiring a lot that because Indian people by nature, mostly from the Indian, UAE and Pakistani people, they are by nature entrepreneurs. So they always wanted to invest directly over there. And always we have been, confronting the question that why we cannot invest directly. They can, definitely, but there's a difference between direct and regional center investment. As an active investment on the direct investment side, number one, the investor has to manage his business actively. So it could be a very much tough for someone who lives in India or who lives outside of the US, that he can manage his business while sitting out of the US. And the most important distinguished factor that he has to prove the US immigration 10 jobs, creation of 10 W2s, 10 physical jobs, versus as in a regional center investment, it's a passive investment. So in a passive investment, definitely investor won't involve in managing of the business, and as well as creation of jobs will be done through an econometrics model as compared to the creation of the physical jobs. So that's the big difference. Econometrics model means that we always put the input and we get the output. And most of the regional centers, we are involving into the construction of the project. So by only construction of the project, we always get the construction jobs. So that's the easy and safest method to creation of the job through regional center versus direct. And the most important thing, the immigration status of an investor will not be dependent upon the operational performance of the asset. For example, if any investor, even who lives in the US, and if he wants to do a direct investment, so it's into economic cycle. If the business goes trend down, or in economic cycle, it went into opposite way. So his immigration status will be tied to the direct investment, that particular asset. So most of the people choose the regional center investment because of that passive kind of a mode and the safest kind of the mode in terms of getting a green card. And our statistics shows that out of 10,000 visas cut, you know very well about that, hardly we have been seeing 200 to 500 visas which comes into a direct investment categories. Most of the people prefer to invest through a regional center investment.
Thanks, Pardeep. So that's a very good point. 95% of investors are currently investing in regional centers. There's one aspect that you might not see as much, that direct investors typically take a lot longer to get approved. It's easier for the adjudicators at USCIS to carefully study a regional center project, which may have 20, 30, 40 investors, and as opposed to a direct investment that has potentially one investor in it. And so they're trying to be as efficient as possible, and they tend to seem to have a little bit longer processing times on direct investments. So there's been some recent policy changes over the last 12 months, significantly changing this program. In November of 2019, we had new regulations. Matt, would you mind walking us through the two dominant things that happened in November regulate or policy announcement?
Yeah, the two biggest things that I think will affect the industry and the investors specifically, the biggest one being the price went up. So originally the price was set at $1 million for an EB-5 investment. It could be reduced to a $500,000 investment if it was made in a rural area or a TEA. That price has now increased. So the maximum or the higher level is 1.8 million. If you're in a TEA or a rural area, the project the program now requires a $900,000 investment. So the second thing is those TEAs, how those TEAs are structured and how they can be calculated. Frankly, before November 21st, it was somewhat the Wild West. There were a lot of people really stretching the boundaries as far as what would qualify, what wouldn't qualify. We saw some mega projects moving forward in Lower Manhattan that probably should not have ever qualified. And the lawmakers in the United States wanted to make sure that the program could benefit, or the reduced investment threshold could benefit areas that truly needed capital infusion. And so they tightened the areas that qualify for TEAs. Frankly, what that did is it eliminated a lot of the projects that were on the market. I think the groups that, the panelists that are here today all have projects that still work. It's probably testament to groups that have not manipulated those TEAs over the years and have focused on probably more conservative TEA metrics and models and locations. But those are the two biggest things. Price went up and TEAs were restricted. So it took a lot of project options away. Those are really the two biggest things.
That's a terrific summation, Matt. The impact of these new regulations certainly put a lot of EB-5 regional centers without a project that qualified at a more reasonable $900,000 level. A lot of them would have been trying to raise money at 1.8 million, and that certainly wasn't gaining much traction. So that's really changed the market significantly. And then in March of 2020, John, we saw another policy change, which changed the way that they decided to process I-526 petitions. Can you tell us a little bit about that? John?
John, you're on mute.
Yeah, you're on mute. Okay, John, while you figure out the mute, Samir's going to answer that question.
Yeah, so the major change was initially it was, the petitions were being processed on a first in, first out basis. But in March of this year, USCIS decided to, process the petitions for those countries first where there was no backlog, or for those countries which were current. So in March, there were 3 countries which were undergoing retrogressions, which means that they had backlogs. That was China, Vietnam, and India. So typically what it would mean is if there were petitions from other countries, then they would be processed first. And the petitions from India, China, Vietnam, and India would be processed subsequently after. However, India is now current. And so this rule, which was maybe a detrimental to India in that phase, is now a positive for India, because India is current. So petitions coming in from India would get processed earlier than petitions from, let's say, China, which still has a backlog.
Thank you, Samir. Great. And I have the exact same opinion about that what we thought was going to be a negative didn't turn out to be. Now, my slides. Okay. Nope, I think we skipped. Okay, so let's talk about processing times. From a petitioner standpoint, this is probably one of the most difficult things to get their head around. And I will tell you, you're not alone. I don't think anyone on this panel feels confident in knowing how long it will take your petition to get approved. I've heard such variances in results recently. Pradeep, what has been your experience as far as processing times lately?
Yeah, so if you look at the published projection of approval of Eb5 26, it's right now, it's in the range of 37 to 72 months. But that's very surprising for us that our experience have been even since at the December 2019, it was between 12 to 18 months. But I'm telling you a very interesting thing. It's for audience as well as that even we got the approvals in our projects, we filed the petitions in November 2019. In the short span of only 6 months, we got 4 approvals, even 2 months before. So that was even surprising for us that how it has been moving fast. So we don't know exact methodology. We don't know exact turning out what how US immigration has been calculating, but our experience has been with approval has been very, very good in terms of from 12 to 18 months. And as I told you, 6 with a minimum of 6 months. And I think that could be contributed maybe the education process, new policy. It also comes in a place, and we always answer when anyone comes to us and they are saying 72 months. So we are always trying to convince the investor that 72 months could be for the Chinese people, because now it's not a first in first out basis. It's on that definitely where you have to process the visa, where the countries don't have a backlog. So to avoid the lawsuit, US immigration has been giving a long range, but our experience with the approval has been 12 to 18 months. 18 months is the max we have seen. We are getting approvals.
Pradeep, you touched upon the filings that lawyers have been filing lately called mandamus filings, arguing that the times have been unreasonable. And the lawyers who I speak with on a weekly basis are telling me that they'll typically file about 2 years after a petition. So if they haven't gotten approval in 2 years, they're going to file a lawsuit against the government. Those have been very successful lately. John, I still see your mute button on. Are you able to turn that off? No. Okay. Well, thanks for the pretty face. Matt, do you have anything to add to processing times?
Yeah, a couple of thoughts on that. I think you'll see, and this is kind of we always talk about the importance of doing your own due diligence and talking to professionals, talking to your immigration attorney. And I think that you'll see a lot of other regional centers out there talking about processing times and sometimes giving you really rosy numbers. You need to always be prepared for the reality of the situation. They post these processing times for a reason. And so there is possibility that could take longer than what the regional center is telling you. So that's, it doesn't help me to say that, right? I could come out and I could say that CMB has had approvals in as little as 18 days because we have. In 2015, we had an 18-day approval. It's crazy, right? But the reality of the situation is that processing times have gone up over the years.
Was that 18-day approval, was that an expedited approval? No.
It was not. That was in 2015. It was on a project that we did in Los Angeles. And so, there's the point I'm making is that there are anomalies in the data. And what happens with the USCIS is that there are anomalies in their data as well. So there are RFEs that cause projects to take longer to be adjudicated and approved. There's a lot of conversation right now about mandamuses and the USCIS having shifted focus to dealing with those mandamuses, and that's caused them to limit their ability to take on and process other 526s. Then there's also talk about, training that the USCIS has implemented. These regs came out at the end of last year. Around that time is when we really started to see these processing times grow. And if you look at the data, it'll show you that in 2018, they processed a heck of a lot more petitions than they did in 2019. And in this first quarter of the fiscal year, into the second quarter of this year, we're anticipating that USCIS is going to process a lot more than the pace that they held in 2019. So, that's positive trends in data that we think might see these processing times come down. but you really should be prepared for anything. You know, I wouldn't stand up here and tell you that expect this time or expect that time, because it's hard to project, and no regional center controls that.
Right, right. And we did hear from Sarah Kendall, the head of IPO, that they were adding a lot of bodies to the adjudicators, and that may be helping speed up things. And Samir, just quickly, could you give us a sense of what are you seeing right now as far as processing times? Have you had many approvals lately?
Yeah, we've been seeing some approvals come in, and we were quite surprised. We thought, with all the talks of furlough and other things, maybe there were less bodies working. But yeah, we have seen a few approvals come in lately, and of late, they have been around 28, 30 months mark. Although earlier, the timelines were much shorter, but of late, it has been around 28 to 30 months.
Yeah, it's very confusing right now. And sorry, we can't add more light on that important issue to investors. So when it comes to reviewing a project, what questions should you be asking? Samir, can I start off with you?
Sure.
The first question I have here, does the investment meet immigration requirements? So when someone's considering whether a project's going to meet immigration requirements, what do you think they should be looking at?
Well, we should ask, first of all, what are the immigration requirements? I mean, we know that for an I-526 to get approved, they're basically looking at whether the project is USCIS compliant or not. So if an investor sees that a project is an I-924 exemplar approved project, this should give them some sense of comfort. And I think from an immigration standpoint, that becomes very, very important. Secondly, of course, if you want to cover the risk of, your I-829, and so you need to see what kind of jobs have been created if the project is ongoing, or what kind of job cushions are made available. And that would then take care of making your green card as permanent. So I think from an immigration standpoint, these two things are very, very important to make sure that an investor understands and invests in a project which is USCIS compliant. If it's I-94 exemplar approved, the better. And a project which is ongoing, which has job creation in it, and a significant job buffer.
Right, right. Yeah, this is, I think you make a really good point, Samir, about there's two aspects to the immigration requirements. You've got your initial requirement to get your I-526 approved, which relates to showing that your money is going to be at risk, that you've made a full investment. And then you ultimately have to prove that you created the jobs at the next stage, the final stage, when you're getting your conditional residency finalized. And that's where you show that your jobs were actually created, and at no point did your money stop being at risk. So does the business make sense? Pardeep, could you help us understand, how does someone evaluate a regional center project or any kind of project to discern whether or not the business is going to make sense?
Yeah, I think this is the most important question which investors should be looking into, because once, as Samir has pointed out, that when investors have seen that, okay, that project qualifies as an TA and there are job creation, everything is fine, so the immigration part is being covered up. Now the next part, their investment business, because definitely they need to get a green card, but they want to their investment back. And this is where like your company or the attorney's role comes into play, that they have to evaluate the project in detail. Like, does the business make sense? There are a number of the factors where investors have to look into. Like, for example, like if they are doing a due diligence on our project or anyone else's project, so they have to look into the area where the project is going to be built, who is the developer, whether the most important thing, whether funding is being covered or not. Because actually right now there are a lot of the players in the market where definitely they have to go to the market to actually raise the funds, then they commit to the developer. So they have to look into that who's behind the project, whether the funding is being committed by the EB-5 regional centers or from the bank or from the developer. So the most important thing which I will look into, and that's my advice to the audience, that they have to look into that, whether the funding part is being covered or not. So sources of the project is being fully covered or not. And as well as the users, sources, they have the sources. Then on the user side, that who is the developer, who's the master developer, who's the contractor, what is the timeline of the completion of project. Once the project gets completed, when the project comes in the market or any business comes in the market, once it become operational, how much cash flow it will generate, and what's the timeline of that project when the developer or the regional center will get exit from that project. So I'm going to say that sources of the project, users of the project, their cash flows, and their exit strategy. This is the most important thing I think that the investor should look into in deep detail. And every regional center provide them the business plan. So they have to go in detail of business plan, and they should consult with the attorney, their tax consultant, attorney, and the firm like you. So this is the most important part they have to go through by evaluating all these fundamental factors which I mentioned.
That's a very good summary, Pardeep. The one I'd like to just expand on is the point you made about an offering having all of its capital lined up and not being dependent on EB-5 capital. Or John, it looks like you might be unmuted now. Is that the case or no?
Yes, I figured out I'm back.
All right, good. John, what do you think about the point that I was about to make, which is it's good to see a project that is not dependent on EB-5 money, but has all of its funding lined up, and then EB-5 money then adds to the capital stack. And could you explain to the audience how that can work?
Yeah, I think, so when you're talking about capital stack, you tend to be discussing a class of investment, the debt side of investment. So a lot of these projects that have been successful in EB-5 have been debt oriented. In other words, your investment funds are being used in a debt-like way, and you're going to be paid back your principal, say, down the line. You're going to be paid interest down the line. So in that sort of a structure, yeah, I mean, EB-5 could be the only source of funds in the entire project, but the more successful projects over time have used EB-5 as a piece of the entire capital stack. In other words, you've got a bank loan involved, you've got some other types of financing involved, and EB-5 leverages the rest of that financing. So for instance, for us, for First Pathway Partners, we've leveraged over $1 billion in investment to create jobs in the United States. So EB-5 being a portion of a debt type of project, but there are also investments in which rather than debt, you can look at an equity investment where you become an owner in a project. And under that type of scenario, instead of being repaid principal and interest over time, you'd actually be repaid in the form of net profits over time. So in that type of a scenario, and this has been very important for our South Asia clients, is that when they hear the word investment, they tend to think of return, and they want to get sometimes they want an enhanced return. And so, you know, traditionally the debt side of things, the returns have been more modest because, you know, the successful practitioners have done safe projects to make sure that their clients get their money back. But you can still create a safe project with an equity investment, and the returns will be higher. But what you must keep in mind is when you're looking at returns and you're considering risk, it's the fundamental sort of caveat that, you know, your returns are a function of your risk, really, and they should be. So
yeah, in fact, Matt, what's your feeling about what John just said? Do you feel that, I'll let you handle that.
Sure, and I think this is a good segue maybe into the next bullet point on there, is the investment structured fairly? Because I think, you know, when a lot of people consider, you know, is the investment structured fairly, they're talking about, was there a fair rate of return paid to the investor who invests into an EB-5 partnership? And as John mentioned, you know, that rate of return is often indicative of risk. The other thing to think about is that, you know, and to kind of jump onto what John said, because it was a great summary of that, you know, when someone goes to make a traditional business investment, they're not, you know, their primary motivation is to make money off of that investment. They're not sitting there thinking, wow, I hope I get my money back at the end of the day. They're thinking, I better get my money back and I better make a substantial rate of return on this investment. When you go into an EB-5 investment, your goals are a little bit different. Primary goal of any EB-5 investment is not rate of return, and it's most certainly getting your green card. And so what you're really looking for is you're trying to find a risk mitigated investment opportunity that puts that above all else. You're also trying to make sure that the group that is organizing that investment, that's monitoring that investment, that's going to be advocating for you if something happens in that investment, is able to sustain themselves. You know, in EB-5, typically, when you talk about the spread on any loan or the equity, there's a substantial amount of capital that's going to the regional center. And then usually it's a smaller amount, a smaller rate of return that's going to the EB-5 investor. And as John mentioned, a lot of times people question that and they're like, well, wait a minute, why the heck can't I earn a high rate of return? Why is the EB-5 Regional Center making more off of this investment than I am? Well, the fact of the matter is you want that EB-5 Regional Center to be around in 6 years or in 7 years or however long it's going to take you to get through your investment.
Right.
Because they have to be there. They have to be there to advocate for you. They have to be there to do your I-829 job creation closeout. If something goes wrong, you're going to want someone to step in. You know, I'll tell you, we have over 75 loans. We've had to step in and file suit against our borrowers. We have a very noteworthy project in Ohio that we took on with a developer that we had to go pursue legal action against for the misappropriation of funds.
Yeah.
There's not a lot of other regional centers that will do that or that'll have the capital or the wherewithal to be able to step in and do those sorts of things.
Right. I'd just like to point out to the participants or the people attending this, two things. One is you must make an equity investment in EB-5. It's a requirement. Once you make an equity investment in what's typically an LLC or a partnership, then they can decide how they want to invest that money. And they'll often loan it, and sometimes they'll invest it as equity. And the other thing I want you to just keep in mind, there's a lot of projects that don't have a lot of risk. And when you don't have a lot of risk, you can borrow money pretty cheaply right now in the markets. So for these 4 regional centers that are on this panel with me today, for them to go through all of the expense and headaches of putting together the regional center, putting together the offering documents, going out and finding investors, and then being subject to not knowing when that money is going to come in, they're doing that because they want to lower their cost of capital. But it's not an inexpensive or easy way to do it. So if you're looking at why are they getting paid, it's because they're structuring something that very few people are willing to do, and that is structure an investment that makes sense and is likely to get your money back and has a high, almost certain, as close to certain possibility of creating those jobs so that you meet all the requirements that you have. Samir, you look like you want to say something.
Yeah. Yeah, so, Matt touched upon it. So, we look at every regional center. We look at multiple projects. If we have a global reach, we have a successful, fundraise that we have done. We are, sort of every borrower, every developer reaches out to us. So it's our job to actually do a fair bit of due diligence to understand who we are dealing with, which developer we want to deal with. And so and that's very important for an investor, that we filter out the ones that we are not comfortable with, and we choose the one where we have maximum comfort that if our investors make an investment there are very high chances that their money will be returned. So, I think that's one of the major jobs that we have as, fund managers, project managers, or regional centers, to choose the right project for our investors.
Right. Pardeep, let me ask you this 4th question. Does the investment timeline match my anticipated timeline? That was a question I actually drafted, and I don't know. Do you understand what I'm trying to ask there?
Yeah, so basically you're asking that investment timeline in terms of that every investor has in mind that he will get his green card in 5 to 6 years of timeline. So whether I will get back my funds in a 6-year timeline or not. I think that's a question you're trying to ask, right?
That's right.
So I think before answering your 4th question, I want to add actually a little note on your question number 3. Is the investment structured fairly? And that's only for audience. I think I would say that every regional center, a good regional center, is working for the investors. They want to see them to get a green card. They want to see them their capital back and to pay them return. Everyone is working on that platform in a different way. Only to audience, I would say that the most important thing they would have to look into, that's the capital stake. That's the most important thing. They always look into the capital stake. It's just for them, okay, whether bank funding or developer security or the EB-5 equity, they should be looking into a structure in a way. Every regional center is trying to make a structure that should be fair for the investor, that's protecting the interests of the investors. So
Yeah.
that was only my point.
Well, that's a really good point. If I could just follow up on that. So you're pointing out the importance of a capital stack, and I agree to some extent that the capital stack will show you where you stand and what collateral you may have on your investment. I'm going to just say that it's one portion, I think, of a fair review of a project, but it is an important one. Sorry to interrupt, Pardeep.
No, that's fine. Okay, now your next question, does investment timeline match my anticipated timeline? Yeah, but I would say generally we have seen that, because everybody structure investment in a sense that it is a timeline of 4 to 5 years. Like to us, like just to give you example, at the Atlantic American partner, we always structure a deal in a way that in a 5-year timeline, the developer has to give back us money through the sale of the asset or through the refinancing of the assets. If not, we always give them a 6 months timeline. If he's unable to sell, we take a control and we took the control and we sell in the market, and definitely we have the investment back into. The problem comes with the petitions or with the investors of those countries who are in the backlog. Because as per the US immigration policy, USA policy, until we do not submit the file the I-829, we cannot give back the investment back to the investor. So what if now India is current, and I don't think so, I'm not seeing any kind of problem until the processing time really varies at the I-526 level. If not, it really matches, because it took them 8 year time, it took them around 5-year timeline when they file I-29, and almost everyone's investment structure in the 5 to 6 years of timeline, it matches. The problem occurs over there where the countries are in the backlog. So if they don't reach at the level of filing at the I-29, then what we have to do, we have to redeploy the capital, and that's a redeployment. And I think that most of the investors don't know about the redeployment risk, which is we always educate the investor. That is something in the part of due diligence you should ask them, that, like, for example, if I sell the asset in a 4-year timeline, now the investor don't reach at the level of I-29, I have to redeploy the asset into the safest form of security. So if I'm giving the loan to another developer, so if it's on a 3-year term loan, and even now the investor got files I-29, we cannot give back their investment amount back, because we already committed their funding. We redeployed the capital on that level. So I mean, say we tried, but it varies case by case. But I think I've seen that that's our industry experience, and we have seen every good regional centers, they always try to make the anticipated timeline with the investment timeline. That's our experience we have seen.
Yeah, thanks, Pardeep. And the important aspect that the audience should understand is your investment must stay at risk until you have satisfied your conditional residency period, meaning you file your I-829. The filing of the I-829 ends your at-risk period. And so that's something you need to be looking into. Samir, last question here. If the investment fails, what rights and remedies does an investor typically have?
Well, the investments in EB-5 are not directly governed by SEC, but SEC has an oversight to the USCIS. And, we're seeing a lot of questions on this front from investors these days, and especially with the COVID situation. And, we know that over 75% of the investment in EB-5 goes into real estate. And a lot of these are in hotels or retail or condominiums. And due to COVID, constructions have either stopped or slowed down, and this causes a lot of problems. So, there is a fair bit of concern on this right now. And if a project does stop, and our investors have invested their money, the investments always have to be at risk. not a risky investment. However, this situation is really proving to be a difficult one at this time for most investors.
You know, Matt, I'd like to throw this question at you too, because you did address the point that you have had borrowers, and I just want to define that the people involved in a deal. So when you as an investor make an investment, you typically make it into what we call an EB-5 fund. And all of these people on this panel are funds. And then the fund will then invest, whether through a loan or an equity investment. Now, Matt, you mentioned you've had borrowers, people that you've lent money to, that have defaulted. And how do you handle that? How does an investor benefit from your firm being involved there?
Yeah, sure. Perfect question. Because, you know, on this bullet point too, if an investor fails, what rights and remedies do I have? That is a crucial piece of due diligence that you need to do up front before you move forward with a regional center. Biggest reason for that is if you look throughout the industry right now, there's actually some notable situations in which I think there's a perception of rights that people have in certain partnerships or certain EB-5 projects that they didn't ever have from the beginning. There's a notable one where investors are asking to inspect the books and records of a certain regional center, and that regional center is saying, you never had that right. You know, I know our limited partners always have that right. And so to back up really quickly, it's important that you understand and you know what those rights and remedies you have are, what questions you can ask, what information the regional center has to provide you, what level of notice they should be providing you if things are going wrong so that you can follow along. But to get really specific to your point, Kurt, it's in our structure, we're a loan model, as it sounds like all of these groups may be, or maybe using some different models. We originated the loan model back in 1997. And the way that it works is that we form a limited partnership, and that's the fund that you're talking about, Kurt. Investors invest into that limited partnership. They become limited partners. Money is pooled at that level and then made as a loan to a developer. And so before we get to a point in which we've ever actually gone out and subscribed to those investors, we actually are vetting the projects individually. We're vetting the developers, understanding their history, understanding their track record, looking at all the details of the project. We're underwriting that project similarly to the way a bank or an investment office would underwrite that project. And we're structuring a loan, and that loan agreement is going to outline all of the collateral, all of the reporting requirements, all of the default provisions and remedies and things of that nature. And that loan is actually an attachment to the private placement memorandum that you're going to review. So that's the second layer of due diligence. But then you need to look at who that regional center is, because ultimately that regional center might be your only advocate. So you want to make sure, in my opinion, you want to make sure that that regional center is unaffiliated and somewhat detached and third party from that developer, because there could be conflicts there that you need to be aware of. In our structures, we serve as a true fiduciary, a true advocate for those limited partners, because if we have, and as I mentioned, that we have had borrowers that have not kept true to their word, or who, in the case I was mentioning in Ohio, misappropriated funds, you know, we had to identify those. Well, how did we identify those things? Through review of reporting information and cross-referencing that with I-829 closeout information. We realized that they were not providing us factual information. They were actually misrepresenting facts and figures and things of that nature.
Right.
And it led to a deeper dive. So our role in that situation was to see all those things through, to figure out where the issues were, and then to go take legal action on behalf of the partnership to make sure that those rights could be wrong, or those wrongs could be righted.
Right. The industry historically had a situation where the developer was really the one looking to raise the money. And so they controlled the fund. So they controlled the EB-5 capital and then acted as the borrower as well. And so that model seems to be phasing out. You still sometimes see the leader of the EB-5 fund still being influenced, or even a control person on the developer side. But I do see that less and less often. And it is a conflict that has to be addressed very carefully if that conflict exists. Well, I think that's the end of our discussion. Do we want to open up to questions at this point?
Kurt, I want to add only one point on your last slide.
Thanks, Freddie. You want me to go to the slide? Sure.
Yeah. So for the last question, this is for the audience who have been listening. I would say that because what I've seen from the investor point of view, that is Matt has mentioned that Matt has given the correct points. I would say that in terms of rights and remedies, definitely they become the part of the fund. Everyone is the fund model. Someone invests in a single asset. We invest into actual diversified assets. We are multi-asset model. I would say investor, which I have seen, nobody has been asking us, and we always told them to ask us. They should be reading operating agreement between the fund and the developer. Every right and remedy has been mentioned over there. What generally investor read, their PPM and offering document and few business plan, they don't go into operating agreement. It's the duty of the attorney, it's the duty of even them, that they should be asking the operating agreement from any regional center where they've been going, and they will find every kind of right and remedy. That's only my advice to audience, whoever, wherever they want to go.
Okay, the one alternative to that is just get on our directory and you'll get all those placed in front of you.
Exactly.
Okay, so all right. So let's find out if there's any questions for us.
Okay.
Hi, so there are a couple of questions on the chat.
Yeah.
Yeah. So we have one question from Ragini. She's asking, can we invest in some existing large projects as private equity? Can we get EB-5 visa?
Investing into a large project to get your EB-5
like private equity.
Like private equity. Well, I think what the panelists told us today is, and John probably spoke about it the most, was, John, do you want to talk about private equity and that opportunity?
I think this kind of, what I'm going to say just ties everything together. You need to find a regional center with a great track record that you feel comfortable with and you can trust, and then take a look at the projects that they are offering and work with them. Work within the system of regional centers that have been successful. It's not like, one of the first things I ask new investors and agents, people learning about EB-5, is tell me what you know about EB-5. And then I'll tell you where you're right and where you're not quite right. And this is how it actually works. And that's a very informative way of getting into EB-5. But in order to summarize, I would say work with the regional centers who've got a great track record, like the ones on this panel, and they will help steer you in the right direction. So the idea of private equity, private equity might be involved in the deal. But it's not like you're going to think of some new approach to EB-5 and then implement it. It's not that simple. EB-5 is a complex visa program.
An earlier point that John made too is that private equity typically involves more risk, and you get paid for that additional risk, but you're taking that risk too. That risk affects probably more the return of your capital than it does your immigration benefits. There's a lot of investments out there with private equity components that have met their immigration requirements or are very strong on the immigration side, but you are risking your money a little bit more. So is that risk commensurate with the return that you're going to be getting? That's the question you need to ask yourself, in my opinion.
And you want to make sure you get your green card.
And you want to make sure you get your green card.
That's your primary motivation.
So we have another question. When we invest in TEA, is there a rule that we need to stay in the particular country or state we invest in, or can we stay anywhere else in the country?
Pardeep, what's the rule on that?
Yeah, so that they can live in any state, they can start business any place. All the US is theirs. Once they file in any TA in any state, it's not compulsory to actually live over there. It's the reason that we always call it's a passive investment. So you just invest with the regional center. Once their I-526 approved, they got their green card, conditional green card, all US is open for them. Wherever they want to live, they can live. They want to start their school or business. There is no restriction at all from any perspective.
Okay. I have Paresh here. Paresh, can you go ahead and ask your question?
Yeah, hi. I have a question for Pradeep. Now, Pradeep, I understand that you are offering a fund structure. So we invest in the fund, and the fund will be investing in multiple projects. So how is the job creation attributed? To which project will you attribute that? How does that work?
Yeah, so from the job perspective, your funds will be allocated to one specific project. So your jobs will be created from that particular project from the US immigration perspective. Like for example, just I'm giving an example. Our 11th fund is going on now. In that fund, we have three assets. One is multifamily housing. It's called Dana Point. It's fully subscribed. Other one is Marriott, and third one is student housing. So right now we have three spots left in that student housing. So when you will invest in our fund, so the investment will come at the fund level. Your investment will go to the student housing, Alabama and Maples. Your jobs will be created from that. So when we file your I-526, we will send you your petition on that student housing to the US immigration. But your risk and return, even that's a third asset. Once you be the part of the fund, once you invest in that student housing, you will be the partner in the Marriott. You will be the partner in the actual Dana Point. So you are sharing the risk and return of the profits level in all those three assets.
Just a further question to that, Pradeep. Now, since the money will be invested in different funds and each of these projects will be in different stages of construction, how do I get my money back?
Yeah, so you will get your money back when we will start selling assets. So for example, even you come at the Alabama Maples, like for example, right now, Dana Point, which we started in 2018 May, it got completed and now it is started pre-leasing right now. Maybe you are coming in the project that will complete in a 2-year timeline. So I totally understand point, but as we will sell those assets, you will get your money back, but we structure a fund in a way. But
I'm going to interrupt you for a second. I think these are great. This is a great question for you guys to take offline because it's very specific to your project.
Okay. So I think Paresh, I will get you in touch, and definitely I'm also available at the booth. So I will get your number, and definitely we will talk in detail. I think Kurt is.
Yeah,
thank you, Kurt.
Yeah. We have another question from Adil. Adil, you can go ahead and ask your question.
Yeah, hi. Can you hear me?
Yes.
Yes. So as you mentioned that 75% of the EB-5 investments are in real estates, but due to COVID, these industries are going down. So what do you think? I mean, what would be the next favorite industry after this COVID thing for EB-5 investments?
I think I touched upon that. So, I didn't say the industries were going down. I just said that most of the, a large part of EB-5 investments are going into real estate. And I wanted to add, something on the back of that last question. And that is, any investment that you make, you have to go through the business plan. You have to go through the, do the due diligence, read the PPM, etc. So you understand what the business model for that investment is. And that should give you that comfort. Who are you? Which project is your money going in? Who's the developer there? What's the business model in this case? Now, if you look at the projects that we have invested in, they are top-notch developers, billionaire developers. Very strong, very deep pockets. So even during these times, and the investments have actually gone into 5-star hotels. And over the last few months, these hotel industry has seen single-digit occupancies. Doesn't mean that they have shut down or the industry has gone down. It is in the interim period that they are seeing very lean occupancies. But if they are strong entities, they are able to sustain these operational losses and come back, because as the markets start opening up, as people start moving, as business travel begins again, the occupancies go back up. So you need to see who are you investing with, who are the developers, who are the people behind it, what kind of projects they have done in the past, what is the plan for the future, etc., before you make this investment. And I think real estate will continue to be in flavor going forward as well, because wherever you come from, whether it's India or Bangladesh or Pakistan or Peru or Brazil, real estate is something that you're very comfortable with. And so if you understand that through the business plan and the offering documents, then you're and the people behind it, then you're comfortable doing that investment.
Adil, my experience is that technology is probably the next opportunity in EB-5. I'm seeing more and more people come to us with opportunities to raise money for tech startups, or not startups, actually. We don't think startups are appropriate. We think it's really growth capital, where they've proven their concept, they're ready for a venture capitalist to grow their business, and the venture capitalist is looking at taking advantage of lower cost of capital through EB-5.
Here, I'd throw one more thing in there.
Oh yeah, please, Matt.
Sure, yeah. You know, I think there's a lot of concern over asset type, obviously, right now. Certain industries are, you know, going through some rough patches right now due to COVID. I mean, look at what we're doing. We're doing a Zoom call rather than being live in attendance at a conference. I went to the last Irex event back at the end of February in India. And so it's going to be a while before we can do those types of events again. But, you know, we're focusing on a little bit different asset types. One asset type that we've been a part of for, you know, really since 2012 is industrial logistics and e-commerce facilities. You know, our latest partnership is 100% pre-leased by 2 Fortune 500 companies. One is an e-commerce giant and the other one is a major US retailer. And so those are the types of projects that I think, you know, probably can give people a little bit different level of, you know, understanding of the risk of those based on who those tenants are and what that business at.
And it's located in a TEA.
And they're located in TEAs.
Okay, great. We have another question coming from Mankirat. Mankirat, you can unmute yourself and ask your question.
Hey everyone, can you hear me?
Yeah.
Yes.
Yeah, so my question was is it possible that I can invest in a running business which has already been established in the States for the last 10, 15 years and acquire like good stake and then apply for EB-5?
Yeah, I think, look, the golden rule is that you can acquire the business, but then you have to create a new jobs. If you think that even that business is very successful, you can invest into over there, but you cannot count on the jobs which the business has already created. First of all, that business should be in a TA area. If the investment is a $900,000, if it's non-TA, it should be a 1.8. But as you mentioned that you will be investing a sufficient amount of funds, so I'm pretty sure that it should be it must be a 1.8. So that won't make differentiate between TA and non-TA. But the most important thing, then you have to create a 10 new economic jobs, because US immigration wants to see that you invest a new capital in the business apart from what you pay to the investor, apart from what you pay to the current owner, and from that capital you created 10 new economic jobs. That's a golden rule, I would say.
Understood. That answers my question. Thank you.
Okay. We have another question from Sanjay. Sanjay, you can unmute yourself.
Yeah, can you hear me, please?
Yes, go ahead.
Okay. So my question is that today I had attended 3 or 4 citizenship by investment seminars. So I have got an office in Dubai. Say one of the client comes there and I have to offer him something. He says, I want a second passport. I want to invest some money. So tell me, as a sales guy, what should I tell him? How can I sell him EB-5 vis-a-vis against other programs where the initial investment is less, where the processing times are less, where at least you know end of the day what percentage of investment money you are getting back. So can anybody tell me why should I sell him EB-5 versus those programs?
I'll jump into this one. It's the United States. It's some people, it sounds cliche and it sounds silly, but I mean, ask that person if they have children, where do their kids want to be? Where do their kids want to go to school? Where do they really want to do business? Where are they most confident in the stability of the economy? Where are they most confident in the stability of the value of the currency? It's going to be the United States. You know, those other places might be cheaper. They might have nice beaches or things of that nature. But the fact of the matter is that the US is still destination number 1 for people who want to move around the world.
You know, Sanjay, I'd also add to that EB-5 is getting easier to understand and feel more confident that you're going to get your money back and that you're going to get the benefits, the immigration benefits that you're signing up for. I think as this industry has shrunk down, it's also become more organized, and I think if you do your homework, there really is no reason why you can't pick a project that has an exceptionally high opportunity to get you your money back and to get your immigration benefits.
I also actually want to add one point. Sanjay, this is a frequent question and we have been encountering because I travel to Dubai a lot. So that's a very frequent question that why US? What we have seen that anybody who wants to immigrate to US, he's a serious investor. He's not looking for the second passport. He's a serious, he wants to really immigrate to the country. You have seen that people coming to you, they want a second passport just as a backup, just as a security. If something happens to Dubai, if something happens to India, they can move. So they don't have any plan to really migrate to that country with the family. They just want to have the second passport so that they cannot, so the people from Pakistan, Bangladesh and India, so they are not supposed to apply for the visas when they want to travel. So this is just backup kind of a thing. Any serious investor will come in, he will definitely sit down with you if he wants to send his kids to US in terms of actually sending for higher education, because right now in around the world, US is the country, it's a land of opportunity. As Matt has pointed out that it's growing fast, it's providing a lot of opportunities in terms of the higher education and the quality of the higher education, and afterwards getting the chances of getting job compared to as an international student, as someone has even someone has a green card. Even I can give you even an example that we have a client, he has 3 kids, he lives in Dubai, and his 3 kids, everybody crossed his 21-year age, and his kids came to US, studied here, came back to Dubai, but then he filed 3 petitions, one for every 1 kid, because he wants to have his kids settled in the US, not other country. So the point to you that if someone comes to you and they want to save the tax, it's not a tax haven. Definitely once people gets a green card, they have to pay the taxes even on their foreign income. So anyone who's serious, he will definitely actually listen to you. If not, and I think that's better for them to get the second passport of any Caribbean or any other country. That's something straight advice.
Actually, all these prior comments are correct, of course, but you can hear me, right?
Yeah.
Okay. There actually is a sort of this alternative approach to getting to the U.S., which involves getting a second passport. And, the reason is that, it's through the E2 investment route, which is different. And it's sometimes seen as an alternative approach to getting an EB-5 visa. It's shorter in wait time, and it's a little bit less money, but it's not the same high level of gold standard benefit that you get from the EB-5 visa. The EB-5 visa is the gold standard around the world. And that's why, we discuss the EB-5, and it's really an excellent and the best if you can get it. But if there's, if you want to consider some other approaches, there are other approaches out there that involve getting a second passport from certain jurisdictions, certain countries that have better access to the United States.
I think, I will also like to chip in that, I think it all starts with having the conversation with the client, with the investor, asking what is it that he really wants.
Right.
And I think a lot of the answers will come from there, because if he's got a family, if he's, and if you talk about the children and their education, anybody worth this kind of money would definitely want to look at US as the first port of call for the children's education. Top universities, great, market, great opportunities for the kids, and once you ask the question, once you talk about the children, their education, in their mind, US will sell by itself. And I think that needs to be the case. Ask the question.
Okay. That was a very interesting question. We have one more from Karan. Hi, Karan. You can go ahead and ask your question. I think Karan is not here. We have another question on the chat that says, I have a company called KEM Technologies USA in New York for 3 years. How can I get EB-5 visa for myself through this company? And also, are we qualified for getting any EB-5 investments directly, or I have to get registered with any regional center? And I'm allowing the other to be there because this was his question.
Yeah, hi. This is my question as mentioned by Ms. Lavanya.
Can you go over the specifics again? You've got a company that you invested in 3 years ago that's located in New York.
Yes, it's a C corporation company. Yeah.
And the company is planning on growing its job creation?
Yes, yes. I mean, it's a young company, but yes, it is going good and we are getting good results. So we are trying to fit it into EB-5 if it is possible.
Well, you don't need to be part of a regional center. You can make a direct investment. The disadvantage to that is regional centers get the benefit of getting to count induced and indirect job creation, which usually multiplies the actual job numbers by 2 or 3 or more. So you have a little bit more of a hurdle to clear through making a direct investment, but it certainly can be done.
Okay. And if we are like, if it is impossible that we create a large number of employments, like more than 10, so is there any kind of fast track green card possibility over here? Something like that, if you make big investment or large number of employment, more than
No.
10?
No.
Okay. Got it.
Okay. We have one more question on the chat. Do you think the government will reduce the minimum investment from USD 900,000 as unemployment continues to surge in US market due to COVID-19?
I'll take that one. No. You know, back in March or April, there was some kind of articles thrown out there that had talked about, you know, the potential to introduce a concept whereby they would, you know, reduce EB-5 or kind of quote unquote put it on sale for a brief period of time to help stimulate renewed interest in the program and get investors to move forward. And I think that that was kind of just, you know, someone's wild thought, and I don't think it ever really had much much hope of going through. This concept of increasing the price was fought over for years, starting back in 2015. And frankly, they were anticipating indexing the price for inflation when they introduced the program back in 1990 and never did. And so it went up to 900,000 on that low end, 1.8 million on the high end. I don't think we'll ever see it go backwards from there.
And
Okay.
I also want to add one thing that as you made mention that definitely we have been also hearing this kind of a question a lot, not here but everybody is asking that, hey, you know, we have seen articles that investment will go down. So even we got a clarification from the US immigration that whatever these are all the rumors. It's a policy thing. It may be, it may not be. It's not in the hands of anyone. Nobody can expect. Actually, right now, there is nothing in anyone's mind what we have seen. And on the top of that, one more thing which we have seen in this market, especially in India, in Dubai, in Pakistan, Bangladesh. Now we have seen the few regional centers, a few other marketing companies. They started, and that's very important for all of the audience. Just a point, and I think Kurt will give a more light on that. That those companies have been starting offering the partial investment, or they are offering give us a $400,000, you will get a green card, or partial investment, one now, one after 2 years. So just to only let you know, guys, that everything which you heard or which you've seen, partial investment is allowed, but under very strict and very stringent to kind of the rules and regulations, not very easily can be done. So be aware of all those things, just only because this is very common in this market. Correct. If you want to highlight something, because you know very well about what I'm talking about, it's very common going on.
Well, I think you did a very good job with that, Pardeep. I think that if you talk to an immigration attorney about making a partial investment, they'll tell you that it is in the regulations, you can do it, but there are so many additional problems. It will slow down your processing time. It's more likely to get a request for evidence, or what we call RFE. So I dissuade anyone who's talking to me about taking that option. If they can help it. If they can't help it, then we work with what we have.
Okay, great. Since we're short of time, I think we'll wrap this up. Thank you to all our panelists for such an insightful panel discussion. In case you didn't get a chance to ask your question or your query remains unanswered, the panelists will be available to speak to you in their virtual booths at the Irex Residency and Citizenship virtual exhibition. We will post the link on the chat for your reference. Please join the virtual expo via the link mentioned in the chat. Thank you all for attending. Thank you all the panelists once again. It was a very, very insightful panel. Thank you, guys.
Thank you.
Yes.
There are many questions on the chat, so it'd be great if you can take out time and reply to those.
Thank you, everyone. It's a pleasure.
Thanks, Mackenzie.
Take care, everyone. Thanks.